Money supply and deposits. Households focused on savings, depositing an additional 6.8 billion into banks and business in banks and building societies. I apologise. There was a clear preference for liquidity and tax efficiency, with 5.5 billion flowing into interest-bearing sight deposits and 4.2 billion into ISAs. So net flow of sterling money slowed to 8.5 billion, down from 14.2 billion in September, reflecting a broader period of consolidation across the UK economy. Bit of fear of ISA clipping that was going on before the budget. Would the limit go down to 5,000, 10,000, 12,000? What would happen? Obviously, what ended up happening was 12,000 and then keeping the 8,000 there for people to ultimately invest in shares if they wanted to. So you still got your 20 grand allowance. You just can't use it on cash all the way through, unless you're over 65, in which case you still can. And they're the only people who've got any money anyway. But we'll talk about that bit later on when we get to the English Housing Survey. So, money supply and deposits, lots of focus on savings. I watched the money supply M4, the measurement. There are many different measurements for the money supply, but M4 actually shrank by 0.2% month on month. And that's helpful to clip inflationary wings, because the figure the month before that I highlighted at the time was plus 0.6%, which is highly inflationary. So that helps out a bit.